Credit. We hear that term all the time these days, but what does it really mean? Good morning and welcome to Maryland Today. My name is Jeff St. Pierre, and with me this morning is Deanna Booker, the Communication and Outreach Manager at Consumer Credit Counseling Service of Maryland in Delaware. Deanna, thank you so much for coming by today.
Thank you so much for having me. It's always a pleasure.
So I have you here today, Deanna, so we can talk a little bit about something we all hear a lot about, but don't necessarily know a lot about. Credit reports and scores. Exactly what is a credit rating and, how does it impact our lives?
Well, it has such an impact, a huge impact. Your credit rating shows and demonstrates to folks looking at your credit report how creditworthy you are. It takes a lot of information that the three major credit reporting agencies gather from a bunch of different places and compiles them into this report that really does demonstrate and designate what your creditworthiness is. And that's going to impact you. It's going to affect how or if you qualify for loans or mortgages or things that you may be trying to apply for. It's going to have an impact when you're trying to rent an apartment or even insurances. That's something that a lot of folks don't know. Our credit rating impacts our insurance premiums.
Oh, I didn't know that.
It has a huge impact, and it really does follow us. It means a lot.
So you said there are three agencies. Is that why you'll see in some of the TV commercials that you have three different credit reports?
That's exactly right. There are three major credit reporting agencies, Experian, Equifax, and TransUnion, and they're all gathering data about us. And some creditors and lenders and folks that we have, credit relationships with don't report to every one of those agencies. So sometimes if we get those reports, we might see things that are missing on one but present on another. And that's because every lender isn't reporting to every agency.
So that's why your score could be different. The three different ones might not all be the same because they're not all reporting
on the same compilation of information. Exactly.
Gotcha. Okay. Well, that makes a lot more sense. What types of information does your credit report contain?
Your credit report is going to have all of what we call your basic personal identifying information. So your name, your address, your social security number, your birth date, that kind of thing. And then, of course, it's also going to contain everything about you and your credit relationships that you might have with various lenders, everything about those accounts. So the balances, how much you owe, when you open the accounts, if you pay them on time, are you 30 days late or 60 days late? All of that kind of information is going to be there. Also, public record information that has to do with you and your finances. So if any liens have ever been levied against you, tax liens or that kind of thing, if you've ever filed bankruptcy, that's a matter of public record. And that kind of financial, legal information is going to appear on your credit report as well.
A few years ago, I went through some financial struggles of my own with credit card companies and things, and I settled with a couple credit card companies. I knew that was going to take a hit on my credit report. How long do things like that last? I mean, how long does information stay on that credit report?
Well, good information, positive information can stay there indefinitely. Negative information, so things like late payments and collections and charge-offs and that kind of thing, you're typically going to see that information stay around for about 7 years. Now, again, there are different, laws that apply in different states, statutes of limitations and that sort of thing. And a lot of it has to do with how the creditor, that, whether it's a collection agency or the original creditor, what their reporting is like and how consistent they are with it. But 7 years is about an average. It's different for bankruptcy. Bankruptcy depends on the chapter of bankruptcy that you file. If you file a Chapter 7 bankruptcy, that's going to stay on your credit report for about 10 years. If you file a Chapter 13 bankruptcy, that's going to be around on your credit report for 7 years.
Sounds like the credit report can be requested for a lot of different reasons. We were talking about apartments and things. And I know that when I was looking to buy a car quite a few years ago, I was shopping through different dealerships. And somebody once told me that the more times they run your credit, it's actually not that good for you. Is that something that's true? I mean, does it hurt your credit to have it checked out more?
Those inquiries, what that person was telling you about is something called an inquiry. Anytime somebody pulls a copy of your credit report, well, let me restate that. Anytime you give someone permission, you apply, you initiate a transaction, and they pull a copy of your credit report, that's what's considered a hard pull or a hard inquiry. And those inquiries are going to stay on our credit report for 2 years. Now, when a lender say you've come to, a lender to buy a house or something, when they pull your credit report and they get a copy of it, they're going to be able to see all of those inquiries. Now, it used to be that the number of inquiries that you had directly impacted your score. If you had more than a given number of inquiries in a given period of time, it was going to negatively impact your score. With the new changes in the credit card laws, the inquiries aren't having the impact on the score. number-wise that they once did. However, they're still going to stay on our credit report for 2 years. So we have to be mindful of the credit that we're applying for and only applying for the credit that we absolutely have to have, because it can send a red flag. If we go and we're trying to get something like you mentioned, the car, we sit down at the table. If a lender sees that we've got, rows and rows and rows of inquiries on our credit report, it can send them a little bit of a red flag up, because it might make them say, wow, this person's out there applying for a whole lot of credit.
Gotcha.
And clearly no one's giving it to them, because here they are sitting in front of me. Do I really want to be the one, to take the risk? Our credit report really denotes for a lender how much of a risk we're going to pose to them should they decide to lend to us. So we've got to consider everything that we're doing, especially when we're making those inquiries.
Talk about some good numbers for credit reports and bad reports. Again, you see these things on TV all the time. You've got people wearing spandex with numbers on their chest or whatever. What is a good score compared to a bad score?
Sure. Credit scores range from about 300 to about 850 or so, 300 being the worst, 800, 850 being the highest. So if you've got a credit score somewhere around 720, 730 in there, that's going to be a score that's acceptable, for lack of a better word, to most lenders. That's what they're looking for, especially in the housing market when you talk about mortgage lending. If your score is below 600, it's down in the fives even, that's when the risk comes in, and that's when either you're not going to qualify for, the things that you're trying to apply for, or if you do, you're going to get, the terms that you get, the interest rates and things like that you end up with are going to be a lot worse because your score is lower.
So we talk a lot about people needing to know what their score is, and by doing that, we have to check our own. Does that go against us at all? Does
No.
it matter how many times we take a look at it?
It does not. That's not going to be counted against us.
That is fantastic. Say that you do request and take a look at your credit report, but you find an error. What is the next step?
Well, you want to contact the credit reporting agency in writing. There is a process that we can all go through if we find inquiries, if we find errors on our credit reports. And so if you do, you want to contact them in writing. The credit reporting agency is going to, as long as they determine that your inquiry to them isn't frivolous, they are bound by law to investigate it. So they're going to go through an investigation. They have to report back. They have to report back what they find. If the error really is an error and there's information that really doesn't belong there, things are wrong, it has to be removed. But there's a process, and you've got to fill out a form. You've got to contact them, like I said, in writing. That's the best way. And they're going to investigate it. If it turns out that it really is wrong, they'll take it off. If the dispute isn't resolved in your favor, you still have a little bit of recourse, because you can still attach to your credit report a statement in 100 words or less that expresses your point of view about that account that you're disputing. Like I said, even if the credit reporting agency didn't find in your favor, so to speak, you can still kind of get a word in, get 100 words in, and say on your credit report or tell your side of the story about that account.
When we're taking a look at these things, I know for myself, I haven't looked at one before, which I'm sure you're probably rolling your eyes and you're mad at me about this right now. But I can't help but wonder, are they easy to read? I mean, when I look at my credit report, will I see it and will an error stand out to me? Or do I really have to know what I'm looking at to be able to find these things?
That's a great question, because honestly, they're not that easy to read.
Okay.
They're not extremely difficult, but if all you've got to do is get a little guidance, that's where somebody can call Consumer Credit. They can call us and just say, hey, I'm looking at my credit report and it says this and this. What does that mean? We can kind of walk you through and talk you through. It's not physics, but it can be, especially if you've never seen one before.
Sure.
It can take a little bit of getting used to how the columns line up, what are there a bunch of acronyms, what everything stands for. But we can help you with that. And once you get that little bit of information, then you'll have no problem understanding it.
I'm trying to think of my bank statement, and I know everything that I spend money on, but sometimes a business might be under a different name than what I think it's going to be. And I'm thinking, I did not spend $30 there. Oh, that was that place.
Exactly. So you have to know. You can get a little kind of crash course in what things stand for, and like I said, what different acronyms mean. But after that, it's easy to understand.
Okay, we've been talking about these credit reports and credit scores. How do you determine a credit score? Credit
score is just math. It really is just a mathematical model that's used to come to that number. Your credit score is like a snapshot. It's a numerical snapshot of what your credit rating kind of encompasses. And there are a few major parts of it. When your credit score is being determined, 35%, more than a third, 35% of what your credit score is going to be or how it's going to be calculated is based on your payment history. How do you pay your bills? Do you pay on time? Are you 30 days late, 60 days, 120 days? How are you paying? Are you paying on time? That's 35%. 30%. So another third or so of how your credit score is going to be determined is based on the amount of debt that you have out there owing. How many accounts do you have? How much debt is, spread between them, kind of your debt to income ratio. I know folks have heard that phrase. So that's a big portion of it. The main portion, though, is payment history. The rest of it, say another 15%, is determined based on the length of your credit history. Lenders are very interested in how long have you been able to demonstrate that you can maintain good credit, that you can have credit and maintain it. How long? So the length of your credit history is important. And then another about 10%, I would say, is based on the types of credit that you have. When lenders are looking at your report, they want to see that you've been able to manage different types of credit. So you didn't just have the credit card. You had the credit card and you had the car loan and you had the mortgage and, different kinds, and you were able to manage all of them. And then another about 10% or so, I'm adding up in my head. I think I'm up to 100%.
We're at 342%. No, I'm kidding.
Another 10% or so has to do with new credit. If all of your credit or all of your positive credit is only, say, 4 months old, that might give a lender a little bit of pause. So how long, that kind of goes along with the length, the history. How long and how new is all of it?
So clearly, if you have a car loan, eventually you're going to pay that car off.
That's
so
right.
That credit will go away. But say you have a credit card that you no longer use, is it in your favor to keep it and not close it because it'll show that you have a long-standing credit?
Now, closing accounts, one part of that, closing accounts can impact our credit scores or will impact our credit scores a bit. So you want to kind of take a little bit of a step back before you jump in and start closing every account you have all at the same time, because that can impact your score. And also, if you have an account that's in long standing, but also in good standing, you've had maybe for decades. I always say you've had a Sears account for a long time, 20 years. You might want to hold off closing that. If it's in good standing, maybe you use it once a year at holiday time, but you keep that account open because that's bolstering. That's the foundation,
Sure.
of some of that long history.
Okay, a couple more questions for you, Deanna, and they're both related to contacting people in order to figure out your credit score and your credit report. Again, we've mentioned a couple times, or at least I've mentioned a couple times, about all these TV advertisements that you see. There are a bunch of different places that tell you they're the best place to get your credit report. Where is the best place to get your credit score?
The best place to get your credit report is from annualcreditreport.com. That is the only place that's free. A lot of these places, the commercials that we see, like you mentioned, they have cute little jingles and cute little songs, and they say they're free, but they're not free. At the end, all of them require that you sign up for some sort of credit monitoring service, and they're going to want your credit card number, and they're going to charge you a fee every month. They're not free. Annualcreditreport.com is the only place to go to get your credit reports for free. It's the only place. All the other places that say they're free, they're not. Now, when we're requesting copies of our credit report, we have to keep in mind that we're entitled to a free copy from each of the credit reporting agencies once a year. So the best way to do it is to stagger it through the year. You get it from one in the beginning of the year from one of the credit reporting agencies. Wait a few months maybe. Then request a copy of the report from the second credit reporting agency. Wait a few more months, request it from the third agency then. So that way you're able to look at your credit report all throughout the year. You didn't get all three of them at once and then, get yourself locked out. You have a chance to view it and request that credit report throughout the year, and that way you can stay on top of what might be in it. Now, that's where you can get your credit. That's how you can get your credit report for free. Now, the score is different. If we want to get our credit scores, we're always going to have to pay for that. You can go to annualcreditreport.com and you will be able to purchase the credit score, not the report, the credit score from each of the bureaus. You can get connected with any of the three credit reporting bureaus right from that site. Depending on which one you get it from, you can expect to pay anywhere between, say, $13 and $20 for the score. The report is free, but the credit score, that number, is going to cost you.
Why do I have to pay to get my credit score?
Well, it's because FICO, we've heard that term, FICO owns the credit scoring model, and they sell it to the credit bureau, so that's why we have to buy it from them.
And at Consumer Credit Counseling Service, you can also find some help there as well. How can people contact you guys?
Absolutely. Folks can reach out to us. They can call our 800 number. It's 1-800-642-2227 and talk with one of our certified, reputable credit counselors, get any kind of help that they might need, or they can visit our website, www.cccs.com. inc.org. We have all sorts of information on there, all kinds of resources, tips, e-learning courses, podcasts, all kinds of things to help folks.
Great. Well, Deanna Booker, thank you so much for coming by and talking to us more about this. It definitely helped me out, and I'm sure other people listening today benefited from this as well.
It's my pleasure. Thank you for having me.
And thank you for joining us.